what are your thoughts on volume profile?
Well, it's sort of a
Today it's Tuesday. How has the week been going for you so far?
the week's been good. Right now is an interesting time because the market, and this has been happening for a while, but it feels even more so as we come on to the eve of NVIDIA's earnings. There is a palpable sense and reality, really, undercurrent of how the market is being led around by a small number of stocks, lots of divergence. And this is, I think, at its apex right now, where we see that NASDAQ, for instance, is really just being led around by what's going on in NVIDIA, and the whole world kind of waiting for tomorrow night to see what they report and how the stock acts. And I think it'll give us a lot of information as to whether or not, the next larger move is up or down.
Wow. Very, very interesting. Have you been trading this week already?
Yeah, of course, all the time. I mean, every day long NVIDIA yesterday into the overnight, which is something that I talked about with my subscribers, saying that there was a good chance that we would gap higher today. And then also another alert saying there's a good chance that once we do gap higher, we'll crap from the open. And that's exactly what happened. You notice that NVIDIA was down big from the open, and that's just a classic. I call it the piling on effect. It's not really any sort of a mystery. I mean, if you have a stock that's bulled up really big, $35, $40 on the day or whatever was up yesterday, and then you add a gap on top of that, you don't want to be the buyer at 9:30 a.m., right? You want to be the seller at 9:30 a.m. That's what I call the piling on effect. So yeah, there's been some stuff going on for sure.
Yeah, it's an interesting time to be alive. So as we're diving into this, maybe we could start off with, how would you describe your approach to the market?
I would say it's extremely technical analysis based with a strong dose of market profile as well. That's how I look at the futures market, which really gives me a good idea as to, what the next moves in the S&P and the NASDAQ are. I'm also relatively short-term oriented. I always like to teach my subscribers that the way to speculate in the short term and be consistently successful at it is to leverage the power of options and try to be a net seller. So I try to do that as often as possible. So I do trade directionally all the time. I kind of split 50-50 between directional and collecting credit. But regardless of whether I'm doing one or the other, I'm always trying to be what I call net short, which means that I create structures that have more shorts than longs inside the structures, as opposed to just say selling a vertical where you're not net short, because when you sell a vertical, you're just short one option, long another option, right? They net out, they're kind of the same. But if you have like a broken wing butterfly or unbalanced butterfly or things like that, then I consider that being net short, with the luxury of also having some long options in front of the short options, right? Which can help a lot if you're wrong on direction. So that's kind of a wide angle overview of what I do.
Okay, very good. Are you trading, do you trade exclusively options?
No, I would say mostly, though. I would say probably 90%. I trade a little bit of futures. I always tell people that I'm not a full-time futures trader, although I do offer a lot of futures commentary, and watching the futures very closely is something that is very, very, close to what I do, because my entire MO basically is that I need every trade I do to be in the same direction as the market. And you can't know what the market is doing without having a really good grasp of how intraday price action works in the future. So I would say I'm about, at least 85% options, maybe 10% futures, and another 5% or so where I'm just trading straight equity. Like yesterday, for instance, NVIDIA, it was not an options play for me. It was just straight equity, because it gives you the luxury of being able to get in and out before the market opens, which like I was telling you, if you didn't have that luxury with NVIDIA this morning, you would have been completely screwed, right? It was only because I was able to get out before the bell, and, the stock tanked huge today. So that wouldn't have happened with options.
Interesting. Is it maybe a part of your prep where before the day even opens, you understand that I'm looking at my main opportunities are going to be for individual names today, or my main opportunity might be a futures play? This is all settled before the market opens, or do these things ever evolve as the day goes on?
I would say a little bit of both. I think in the broad market itself, I'm a little more of of the prep, of the homework. I read a report every morning that I've been doing for years. It's called Peter's Premarket Perspective. And it's basically all the key levels and scenarios of how I think the day is going to play out, what the key levels are, what are the pre-market indications that you need to be looking at, what are, answering the 3 pre-market questions, which I talk about a lot, things like that. And I'll come out with that every day at 9 a.m. Eastern, like 30 minutes before the market opens. And that really deals specifically with how I feel that the broad market is going to evolve that day. And I think if you use that as a starting point and you at least have a good handle on some multiple scenarios, you're not going to ever know for sure, but some multiple scenarios of how the broad market could play out that day, that is going to give you such a leg up in terms of what you do or don't do with individual stocks or futures or et cetera.
Do you believe the markets are random?
No, not completely. No, I don't believe the markets are random. I believe the markets are driven solely by human emotion, and humans are relatively predictable because we all tend to succumb to the same demons, so to speak. And so the markets are driven by fear and greed mostly. And that fear and greed is organized into different time frames. And that's basically how it is in a nutshell. If you're a trader, you can see very clearly how, and the market profile helps a lot with this. I'm a huge student of market profile. And that's essentially what the market profile does, is the market profile organizes the information of the market in a way that helps you to see which time frames are active versus not active, right? Where there's value versus price, et cetera, things like that. So that's what I think is the real driver of the market. I don't think it's random at all. I think almost every single market phenomenon price-wise can be explained through this lens of, okay, it's simply this time frame is doing this time frame is doing that, et cetera, et cetera.
And so maybe it'd be fair to say that on certain time frames, there are noise where we could say maybe that would be random type action. And then mixed within that, there are things that are more structured, things that are more clear, where the market is maybe trying to accomplish something, or maybe even inside of that noise, do you think the market is trying to accomplish something inside of that always?
I think that's a very good question. I think that inside of the noise, the market may be trying to accomplish something, but what it's really telling us is that there's a consensus. Whenever you have noise where a range is compressed, at that time, value is fair. What is happening is an immense amount of futures contracts or particular shares in that stock or whatever the instrument is, they're being distributed back and forth amongst the players. And as we know, the most efficient type of market is the one that sells the most, essentially, right? I always tell people that what's going on in the market in the auction process is no different from a store that sells widgets or cars or whatever it is. If you have a dealership that sells 1 car a month, you're not an efficient market. But if that same dealership sells 1,000 cars a month, that's a very efficient market. And the price discovery that you get out of that is going to be very, very accurate, right? Like the thing that they sell 1,000 of in 1 month, you can be pretty darn sure that the price they're selling at is probably the fairest price. They're not ripping anybody off and nobody's getting it cheap. It's a very, very fair price because you have enough of a set, you have enough of a set that defines value essentially, right? Because value, as we know, is defined by price plus time or price plus volume. If you just have price by itself, if I just tell you, hey, this thing costs X, you have no real way of knowing if there's any value there or not. But if I tell you, 1,000 of these have sold at X, you'd be the 1,001 person to buy it, then you would feel more comfortable. You would say to yourself, okay, that's value. So when this noise is occurring, to me, the market is in balance and the market is just telling you that there's value there.
When you're trading, do you have a primary products that you trade, or is it pretty spread out where you might trade anything on a given day? Or do you find like most of the time you're trading S&P or something like this?
Yeah, it's a relatively small universe, to be honest with you. I really like Fangman plus T, as I call it. So you have those stocks plus Tesla. I will mostly look to those for options plays, for weekly options. That's, most of what I do is weekly options. I run an advisory for that. And, those are a lot of my trades. And then beyond that, I look to SPX and INDX. I like the indices a lot. As the volatility has moved a lot lower recently, which is only now starting to pick up a tiny bit, SPX options have not been as good. So I've shifted a little bit more towards NDX because in the DTE0, DTE1 realm, there's still a lot of premium there. Whereas in a VIX 16 16, 17 environment, and it, it's been even lower than that, as we know, the premium isn't that great in SPX. So it's not that easy to put on. But I would say, to answer the question in a nutshell, it's a relatively small universe. I'm not one of those people that chases like the hottest fad, the thing that's going on. GameStop is a good example. All that meme stuff that happened, I never participated in any of that. It's just not my style.
When you are maybe having just like a normal trading day, could you walk us through what that looks like for you, from maybe the time you get up to how any type of routines that you do to prepare your body or your mind, whatever, to what it looks like when you start doing your prep, to what a normal trading day looks like, and then maybe even what you do post your trading day?
Yeah, absolutely. I mean, I have to be honest with you that my prep has changed somewhat recently, because about 8 months or so ago, I moved from the East Coast to the West Coast. I live in Los Angeles now. And so that has changed a lot, because unfortunately it's taken away some of, I haven't cut down anything in terms of the prep of the market. I mean, I'm doing the pre-market perspective. I'm shooting a video every morning. And this not only obviously is I'm doing this for subscribers, but it helps me so much to sort of crystallize all the thoughts in my head and really organize what I'm seeing in front of me with the pre-market. But, on a personal level, I'll be honest with you, when I had much more time in the morning, when I wasn't, getting up at 5 for the markets on the East Coast, being out here, I would incorporate a lot more personal stuff into it, such as, meditation, things like that, maybe a little bit of, Tai Chi type stuff, breathing, whatever, anything that can sort of calm the mind to get you more in the mindset of being more mindful and seeing, getting ready for the day. As far as the market stuff is concerned, like I said, no change there. My main thing is to take a very, very deep dive on the overnight activity in the ES. And that's what forms the basis of my report, my video every morning. I look at a lot of things that I feel that most people don't. I'm extremely interested in overnight activity, whether that overnight activity is long or short, where that overnight activity is traded in relation to the prior day's settlement, where that overnight activity sits sort of inside or outside in relation to the prior day's range. All of these are huge pieces of market generated information that will give you an edge, I believe, in understanding what the market is going to do, especially early in the day. A lot of traders get very, very tripped up with the first 30 minutes, and I think they overtrade and they just jump into sort of this mess when they really shouldn't. And this morning analysis that I do is very, very instrumental in keeping you out of that sort of trouble. Like, it will really, it helps me as well, and I hope that it helps other people. So that's a huge part of it.
Mm. And that analysis primarily done with market profile or any other tools?
Correct. Primarily with market profile, a little bit with TA. I would say it's like 85% market profile and 50% TA. But yes, primarily market profile, because only market profile, only that type of chart can show you the amount of time that was spent at every price level. No candlestick chart can show you that, because all other types of charts are only O, H, L, and C, and that's the data that they give you. And obviously that can be drawn in different ways. I can use a bar, I can use a candlestick, whatever, but it's really just O, H, L, and C, whereas the market profile builds out sideways this way, right? It doesn't just go up and down. And every time it builds out in every 30-minute period, it's showing us how much time was spent at every single price level. And what I do is I have the distributions separated. So I have the regular trading hours, which we call RTH, I have that distribution, and next to it, I have the overnight distributions. And because I have those distributions separated, it gives me a really good window, I think, into, what the tone is, we'll say, overnight, and what the tone is coming into the bell.
Okay. So because you're shifting schedule now and the market opening so early for your local time, kind of getting up and mostly starting the day, doing your prep, the day begins. Do you trade open to close, or how many hours are you on the screens?
I'm on the screens the whole time. The whole 6.5 hours that the market is open, I'm on full time. But because I'm not that much of a day trader as I used to be, I still will have days where if the volatility is right and I see setups, I mean, most days, to be honest with you, I'll probably do 1 or 2 day trades. But I'm not the type of trader that's, for instance, glued to the screen and looking for that particular opportunity. What I'm mostly doing all day long is I'm glued to the screen because I want to know if what the broad market is doing is supporting or not supporting the positions that I have. So I know what my positions are. I'm usually in about anywhere from 5 to 15 trades over the course of a week. They're mostly weekly options, so they expire either this week or the week after, et cetera. And I'm just constantly looking for confirmation of what the broad market is doing to support my thesis of basically telling me, should I stay in these trades or should I make some sort of an adjustment? And that's basically it.
And then when the market is, let's say, closed, you're done for that trading day. Any type of a end of day ritual that you go through?
No, I would say not so much on the end of day. I mean, I will obviously look at charts when the market is closed on the weekends. I will also look at some longer term charts a lot in the afternoon when the market slows down, let's say 3 p.m. Eastern to 4. But I don't think there's anything, really specific that I would point to that's, post market.
One thing that's very fascinating about trading is the performance nature of this endeavor, but also the longevity that we can have as opposed to maybe certain athletic endeavors, since this is such a mental athletic endeavor. And I preface it with that because I don't want this to be taken the wrong way. You've been in the game a long time. You've had a very long and great career in trading. At your stage, do you ever have thoughts of when it will be time to kind of hang up the mouse and move on to something else? Is this the type of business that you think you'll die at the keyboard, or do you ever have thoughts about what happens next, or when trading stops?
All the time, just because that's just kind of the type of person that I am. And I think maybe some subscribers or followers of my stuff will be surprised to hear me say this. But for me, it's a means to an end. And it's not I don't want to speak negative about, I'm not speaking negative about it all, because obviously I love what I do and I have a serious passion for trading. And it's like a puzzle to solve every day. And some days you solve the puzzle perfectly and some days you don't. And it's such a beautiful meritocracy and I love it so much. But I also, without getting too deep into the specifics of it, I mean, life is really rich, right? And there's so much out there outside of this one thing, and we only have so much time as people. It's all finite for all of us, unfortunately. So, I would just say there's a million other things I would like to delve into, but trading, especially running an advisory like I do and everything, it's an extremely all-encompassing pursuit that, as you can imagine, takes up most of your time. So, yeah, I mean, I don't know when that is, but I think I do look forward to a time where I can explore other avenues as well.
Very good. The slightly off topic, but I actually didn't want to forget the name ShadowTrader. Popular in the space now. What was the inspiration for ShadowTrader?
It was really simple, to be honest with you. It's funny how it came about because I have a couple of partners in the business. And when we were forming it, this was all the way back in 2006. So we really pride ourselves on being one of the advisory companies that's really been in business longer than almost anybody. I mean, we have a lot of longevity in this space. And when it came time to name it, to be honest with you, one of my business partners literally just sent me, I think he actually had it printed out. I think we were in the same room. I don't remember, but he had printed out something where he had written like 20 different potential names for the business. And I remember ShadowTrader, for some reason, not only did it just jump off the page at me, but it was also in the middle of the page. And it wasn't a list. They were all just kind of randomly dispersed, like thrown on the page, not in like an up and down or vertical or horizontal list. And I remember my eye just going to it and I circled it and handed it back to him. I was like, this is the one. It's going to be called ShadowTrader. Just do that, because you're shadowing the actions of professional traders, and it's perfect. That's exactly what it should be.
Can I ask to kind of pick your brain a little bit? If you were to take apart and think of the individual things that would make up the whole, what in your mind makes a good individual trading business? A good individual trading business, or like a good trader? I imagine every good trading business needs a trader. A good trader would have to be a crucial part of that. But I guess I'm thinking a little bit more zoomed out, in the sense that if you're looking at an individual, not just trader, but an individual trader being a part of a trading business, do any individual parts come to mind of that? Or if it's easier to just talk about what makes a good trader, we can move on to that. Yeah, I mean, I think it's definitely easier to talk about like what becomes a good trader. In my business, one of the things that we do is we have two different rooms, and one I run myself exclusively. It's just me. And the other one we call ShadowTrader Squawk Box, which has 7 traders. I'm one of them, but I play a very small role there because I'm usually, I'm doing my own advisory. So of the 6 other traders, it's interesting you asked that, because I've been slowly over the last 6 months or so, I've been adding a lot of new names to that list. We've added a bunch of new traders, and it's kind of hard to say. I mean, what I'm specifically looking for, because in the advisory business, like if you're running that type of a business and you have a room where you're trading live and people are watching and whatever, you have to understand that some of it does come down to the personality and the delivery.
And that may often have nothing to do with trading. I've met all kinds of traders over the years, and some are really good at one and bad at the other, and or vice versa. And all I can say is that what we do is I really pride myself on the fact that we try our best to skew more towards, can you walk the walk? And, if the delivery is not as polished as, say, someone you see on television or whatever, well, so what? Because what you see on television, for instance, as you know, that's the dead opposite, right? I mean, those people, they have nice clothes, they're good looking, and they know how to speak well in front of the camera, but none of them are really traders, right? None of them trade at all. They're just talking heads on a news channel, So you kind of have to walk like a fine line between those two things if you want to have that type of business. But really, the emphasis has to be on what do they trade, how do they trade it, and what is their process, which is most important. Like, you can always tell an individual, I think, from my experience in the many, I've had conversations with like 1,000 different traders. I can tell, for instance, right off the bat, if they're a gambler. That's bad. I'm not interested, or anything they tell me I'm not really interested in, because I know that whatever money they're making, they're probably just, they're going for Hail Marys or things like that. And they're going to blow up. They're definitely like headed for a blow up, because they're the type of person that they do it out of a need, not out of a want. And they're not disciplined. That's just the nature of somebody who is sort of degenerate in that self and has a gambling mentality. That's just one type of personality facet that comes to mind. There's others, obviously. Like, person has to be, I think, very measured sort of in their actions. They can't be quick to be on the trigger. To me, all the time, no matter what style you do, what type of trader you are. I mean, unless you're some sort of a really successful scalper, and there's not really that many of those people, because it's a very hard road to hoe. It's really, how good are you at just waiting it out, right? How good are you at waiting through the downturn and being able to bring in all the data points and know that, okay, yes, this position is going against me, but no, this position should not be closed, because, right, as we talked about the time frames earlier, a shorter time frame is taking this position against me, but the longer time frame, the one that I'm in, that time frame hasn't changed at all, right? So a lot of it comes down to being able to discern that and having the intestinal fortitude to kind of stay with it.
Very good. Kind of maybe along the same thing, if you don't mind, a little more brain picking here. Could you break down in your mind what makes a good trade?
What makes a good trade is essentially just following the plan, and a good trade has to I'll tell you from my personal way, the way I look at it, and with the caveat that this would be maybe different for a lot of people. For me, a good trade has to, one, be in the same direction as what the broad market is doing. Two, has to have very solid TA. So we need to have a specific technical event happening that will tell us why we want to do this, right? And then three, the rest all just comes down to management. A good trade is one that is managed and not adjusted or taken off because of some sort of emotional feeling or whatever, but only adjusted or taken off when the market tells us to do so, meaning it either gives the signal that we wanted all along to exit, or it gives some sort of specific signal that it's no longer working and we don't want to play the hope card and we need to kill it right now. That's a good trade.
What are your thoughts on volume profile?
Well, I think it's like a weaker version of the market profile, right? Because I guess when you're talking about volume profile, you're just talking about specifically like the histograms that are going from left to right? So where the volume is at the levels. Now, me personally, when I profile, I also do use volume, which is important to note, is the traditional way of market profile is that it's all about time. And as the TPOs are forming and it's building out, it's all about how much time is spent at each level, and the value is defined by time. I understand that, and I use that as well. But when I do my calculations, or I should say when my window trader software does the calculations for me, I have it set to volume. So kind of in effect, I'm volume profiling at the same time, but I'm looking at it more in terms of the TPO distributions as opposed to those classic, horizontal volume bars going across. But I'm a big believer in it, absolutely. I mean, one of the things I talk about all the time is like pure profile traders versus not so pure profile traders. And I'll be the first one to admit I'm not a pure profile trader. Classic example of like a pure profile trader is like they are very, very in tune, for instance, with where the high volume nodes are, where the POC is, things like that. And the pure profile trader will be long or short away from those areas, looking for the pull up to those areas. right? That to me is like very pure profile trading, very hardcore. I don't generally do that sort of thing. I'm using the profile more for like as an analysis tool, but I love the idea of it. I'm 100% a believer in it. If somebody tells me, look, there's no chart pattern here, like I have a lot like this, I can just think of right off the bat, a couple of people who work for me in the other chat room, and it's the same exact thing. They're pure profile traders and they pull off that trade all the time. And it's a marvel to watch. It's just gorgeous because they're getting long or short at an area where me looking at the chart would be like, why? There's nothing here. But then, you see what they're showing in terms of their distributions, and they're long here. And let's say the most time was spent here in the overnight session, and it's really wide. And their thesis is, look, here we are, kind of not doing too much in over the course of the day. It's relatively early. We're going to be pulled to here. This is where value is. And lo and behold, 90 minutes later, you're there. It's a beautiful thing.
No doubt. No doubt. I'm also a very, very big fan as well.
Yeah.
In your opinion, do you think anybody could become a trader?
No, I think there are certain personality characteristics that would be very difficult to unlearn. And I think there is definitely some segment of the population that is simply not cut out for it. Mentally, personality-wise, discipline-wise, it's not. I don't think it's a one size fits all type of thing, and just anybody can do it. Even for those people I think are naturally sort of inclined to it, or not really inclined, but maybe have all the pieces of the puzzle, meaning, okay, like, I don't really have a gambling streak. I'm definitely disciplined. I'm patient. I can wait, things like that. I mean, as well as I do, even for that type of individual. And I would kind of put myself in that camp. You're talking about years of development to get there. I wasn't profitable right off the bat by a long shot. I mean, I took the normal kind of average learning curve that most people take, which was 5 to 7 years. It was the same learning curve for me, so.
Do you think anybody could make money with any type of consistency, strictly following trying to mechanically follow a lagging indicator type strategy?
Not over time if they don't adjust, no, because, RSI, CCI, things like that, it's going to stay overbought or oversold longer than you can stay solvent. And this happens all the time where those types of indicators tend to fool traders, as we know, because if they do it very mechanically, and if you're not well seasoned in the game, you're going to do it mechanically, meaning that you're not going to know the difference between, okay, yes, this RSI is at 98, but there's all these other data points that are telling me, so what? This is not the same thing as when it was 98 2 weeks ago and I shorted and it worked out perfectly. There's a lot of other things here. So I think if you just, anything can work really if you don't do it blindly. And that's where the difficult part comes in, right? Is you got to ask yourself is why haven't computers just figured all this out? Why hasn't it all just been arbed out and the market is flat, like with AI and things like that? The reason is because the inputs are constantly changing. And, if you could boil down the market or being successful over time, consistent in the market, if you could boil it down to one thing, right? It's that you have to know when not to apply the strategy. And computers are not good at that. And human beings to a degree are not good at that either, because what people inherently want is they inherently want something systematic that will tell them what to do and when to do it, so that they don't have to think too much and that it'll take some emotion out of it. And that's great. I understand that. I would love to have that too, but I'm very, very cognizant of the reality that the market simply does not work that way. And, the success in the market is always going to come from avoiding losses, not from making gains, right? That's something that not enough people think about either, I think, is that they just assume it's like, tell me what I have to do to win. And I always say, well, you're already going down the wrong path, because what you should be asking is, tell me what to do not to lose. And, that's the thing is, and how do you not lose? You don't lose. And I'm not saying you never lose. I mean, every trader, myself included, has losing trades all the time. The question is, what kind of losers are there, and what reason is there behind the losers, right? There's good losses and there's bad losses. If you have to know how not to take bad losses. Bad losses are the ones that come from taking a trade that should never have been taken in the first place. A good loss comes from taking a trade that did have all the proper criteria, and for whatever reason, the market just decided to, do its own thing and just, turn on a dime or do something surprising. That's going to happen all the time. You're never going to be able to get away from that.
A lot of really great words right there. I enjoyed that part of our conversation. Let me ask you this. If there was a person who's very committed to trading and they really want to push their performance to a new level. They really just want to just move the needle with their trading. What would you prescribe, or what would you suggest would be some of the actions that they really need to be focused on? Maybe even potentially outside of their particular strategy, maybe something a little universal that you think would really tip the needle on most people's performance.
Yeah, I think if a person can, I think they should put as much effort as they can into health, from a general perspective. I'm saying that's just an obvious one, but the sleep is extremely important. Don't do things, during the week or whatever, or that would impede your performance the next day. Don't stay up late. Drugs and alcohol, whatever, all this stuff just doesn't fit well with this endeavor. So you have to certainly be disciplined enough to kind of stay away from that. I would say live as healthy as possible. Diet matters a lot as well. I'm not saying that these things have direct correlation on how you trade, and I'm sure there's some people that are, don't care about this stuff, and maybe they're great traders or whatever, but that's just an easy thing I think that most traders can fix quickly, right? If you can get your non-trading life in order, it should help immensely. And then beyond that, if you want to talk about the specific process, how I think trader takes it kind of to the next level, or moves from a level of, say, not profitability to profitability, or once they're profitable starts to increase size and ramp up or whatever, that sort of consistency I think mostly comes from record keeping and going back and studying those records, especially losing trades. Classic thing people say in the markets, which is 100% true, is that you're not going to learn anything from the winners. Go back, analyze losers, keep asking yourself the question, was this a good loss? Was this a bad loss? Was this my quote unquote fault or not? And if it was, that's where all the information lies. That's where all the self-improvement happens, right there at that point where not even when the loss occurred, because the loss occurs when you close it, but when that losing trade was put on, 99% of the time, that's the turning point right there. You can probably find one thing or a group of things that were happening that you didn't see that should have precluded you from taking that trade.
Very good. If somebody is identified what they are struggling with, because I feel like for almost everybody, if we looked at anybody's trading, it might be overwhelming, or it might seem to the person like things are just not working out. But if you had some records and if you had some clarity, if you could just dive into it, there would just be a couple things that are causing the majority of all the issues. That if you just straightened out, these 2 to 5 things, yeah, most of the losses go away, most of the winners are, everything just flips around at that point. Yeah. And let's say it's maybe obvious that, hey, I am constantly, putting on way too big position size. I am getting caught up in the action or the noise. I'm letting myself take off perfectly good trades early. If somebody knows what their issue is, but they find themselves just kind of continuing to repeat the same actions and not maybe being able to improve in that area, what would your advice be to that person? Separate
all of those actions and attack them one at a time. Don't think you will attack them all at once. Like for most people, it's a laundry list of things. It is for all of us. I mean, trading, it's such a difficult endeavor, and we all struggle with our own demons all the time, right? Everybody's got their Achilles heel, and usually it's multiple Achilles heels. But I think the only way to knock them all out or weaken them all is to weaken them one at a time. So find the one that is the most egregious and just say to yourself, look, the next week, the next month, the next quarter is not going to be about the P&L. It is going to be about eliminating this thing. So I will try to keep very, very specific, records. And I will say, okay, on my next 10 trades, I want to not make this mistake. And then, okay, can I go 20 trades without making that particular mistake? You know what I'm saying? That's what I think. I think separate it and divide and conquer and just attack each one specifically for as long as it takes until you can get that out of your system and then move on to the next one.
Great words. Really great words. When you reflect back on your journey and maybe, like you said, that 5-7 year or so, just learning curve of getting to over the consistency hump and making it in this field for you, can you think about what were some of, or maybe one of the biggest personal issues that you had, whether it was, over trading or sizing or whatever it was? Can you think of either a performance thing or maybe a technical thing that was one of your biggest things that you really had to push through and work on?
Yeah, I would say it was basically just not understanding the time frames and probably getting out too early and not having a bigger vision of where things could go, and understanding that like we talked about earlier, that a lot of times just the choppiness in the market is just due to that very short time frame that's kind of batting it back and forth, but that the actual trade that you're trying to do has to be more in line with the larger time frame. I think that was really a huge kind of a turning point for me. That's pretty much it. Overall, it really just comes down, I think, to a lot of discipline, and discipline is something that if you kind of set your mind to it, you can improve it over time. So like all newer traders, like early on, I didn't have the same discipline that I have now, especially certainly for like holding things or kind of looking at things more objectively, right? Like newer traders tend to have their eyes glued to the P&L the whole time. And very, very early on, I used to do that all the time where, I wasn't even looking at the chart. I was just looking at like the monitor tab where the positions would be and kind of judging it as to how much red and green was on the screen, just stuff like that. That's just natural to how newer traders look at it, because they're very, very focused. When a new person comes into the market, I think they're very, very focused on how much money they are making and losing. And that's a problem, because that's really not where their focus should be. Their focus should really be more on the process and what is happening contextually that is causing the gains or losses, right? You have to get your mind acclimated towards being very, very focused on all that context, both in the market that we see and in market internals, what the drivers are underneath it, to tell us if the trade that we're in is a good trade or bad trade, as opposed to the P&L. The P&L is really never a good judge of whether it's a good trade or bad trade. I mean, think about it. Even a P&L that's like very positive, this happens to all of us where, you have a good trade and that number is different for everybody, So let's say you make 10,000 on a trade or whatever, and then you go back and look at the chart and you realize that the move that you took half of the move out, the move was actually 2x that or whatever. That's another way to judge it. Was it a good trade or wasn't it a good trade? Certainly it was a good trade. It achieved a certain P&L objective, but did it achieve the whole objective? It's different for every single person. But that's an interesting way to think about it, right? It's just kind of take your mind away from that green and red and all that, and bring your mind more towards the context of what causes that.
In your experience, as you progress as a trader and as you some of these just fundamental errors that you make out of not understanding, and then some of the more performance and individual things like being able to hold on long enough and think more strategically and zoom out, do you find that there are issues that you get past and then they're just solved, where the idea of taking a trade off early or the idea of zooming in too far, these aren't things that register anymore, they're not a part of your trading at all? Or do you feel that there are things that you improve upon, that you have a level of mastery over them, but even through to today you stay on guard, because if you ever kind of let your walls down or get sloppy, you'll revert back to that type of behavior?
Yeah, I think it's a lot of the latter, but not completely. Like, because I've been doing this so long, I would not foresee myself reverting all the way back, but definitely you could easily revert back a little, right? Like I guess the best way to say it is, like, let's say you have a brand new trader and they put on a position, right? The first thing they're going to do is being glued to the P&L, and 5 minutes into the trade, if the trade is down, whatever, not so much in terms of dollars or points or whatever, they might change their mind. That is something that, once you get past a certain level, you would never do. And also what you start to do is that when you put something on, I try to have the best location possible so that it goes in my favor from the moment I put it on, but I can't always be perfect with that, not even close, right? Nobody can. So for me, what it is I just realized over time that as you become more seasoned in the game, you don't even think about taking it off, right? You're like, well, okay, this is a play that has a 9-day duration. So yes, it went against me. The moment I put it on, it literally started going against me. Okay, but unless the thesis has actually changed, unless the thing that happened in that particular moment completely changed the chart and the thesis, I could care less that it's going against me. Like, it's not even a factor. I'm literally, I'm not fazed at all by that. There's no part of me that's even thinking like, oh, okay, I should kill this. Now, understand that that's important to note, because that's when your time frame is longer. But if we were talking about a day trade, well, that's different, because then you definitely have to be on guard for not getting out very quickly. And you also have to definitely be, that monitoring process that you're talking about has to be that much more vigilant, right? Because the entire trade is designed to be over in 10 or 15 minutes. So we have to be hyper vigilant at every moment of the trade on, unwinding its, or, sort of unfolding every moment, to see if all the contextual things and the price action and whatever is confirming or denying what our goal is going to be.
What do you think about back testing ideas?
I don't think it has a lot of value. Yeah, I don't think it has a lot of value. I think that traders would be much better served in forward testing ideas with very small size. And that is also important too. Is I wouldn't even forward test stuff in a simulator. I think the best way to learn trading would be to have like a $2,000 account, and if you're going to do options, just trade one contract. Maybe for options you probably need a little more than that because you need a little more cushion, probably more like 5,000 or whatever. But let's say you were just trading straight equity, especially in this day and age where now we have the luxury of equity commissions being zero, literally zero, right? Best thing you could do ever would be to have, if you have that very small account, you're just starting out, trade 5 shares, trade 2 shares. Why not? Whatever, some number that's enough to scale out. 4 shares is a good number, right? Because I can take off one at a time and a quarter. And who cares that at the end of the day, my P&L might be, $1 and $1.87. That's meaningless. It's the process. I mean, that would be pretty amazing if you traded 4 shares all day and your P&L was $1.87, but more so, forget about the number. Trade that tiny size all day and have your process all defined and written down and documented. What was your process that day? Say, okay, I entered here. My target was here. Did I hold all the way to the target? Did I scale out properly? I knew that if it crossed to here, I would get out half. I did, blah, 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 et cetera, right? It's all about the process is the thing 100% of the time. The process drives everything. And the P&L is just a function of size at the end of the day. And that's different for me as it is for somebody. It's different, that's all relative. So, it's what it's all going to come down to at the end of the day, right? It's going to be the size times the movement equals what you make. But what happens from A to B in between is really all that matters most, I think, in terms of our development as a trader and what chances we have rather of staying in the game versus blowing up, right? That's all going to come down to that process.
Yeah, very interesting take there. When you think about tracking KPIs for performance, are there any charting package, any service you would subscribe to tracks, so many things? Are there potentially a small handful of maybe like 5 or 6 KPIs or less that like these are the only things that really matter to you? Or is it fairly broad of what you track from, let's say, a metric standpoint?
I would have to say it's actually far less than I used to do. I used to be very, very meticulous in the early days. And I think everybody should when they start out of tracking things like that, different spreadsheets. I was really, to be honest with you, more interested in the psychological aspect of it. So I always tell people that, the spreadsheet usually looks the same for everybody, where you have the in, the out, and the date and the time and the points won and lost and whatever. But really what's the most important thing is that rightmost column, that column that's called comments. And then you write in there okay, and you can even divide that and get more granular of okay, market, mind state, right? Things like that. So, okay, so this is what the market was doing when I put on the trade. Did that jive with what my objective was? Okay, yes, that was right or wrong. Mind state, super important. Was I agitated that day? Did I sleep poorly? Did I sleep well? Did I get into an argument with somebody in the family? Things like that. All of that is so important. Those are really the most important metrics. As far as the specific type of KPIs, that's going to be different for every trader. I wouldn't speculate on what that would be for traders, because you have a person who, for instance, only wants to day trade futures. Well, that can be very lucrative over time. I mean, if you can nail that down, that's cool. Those types of performance metrics are going to be different from the person who's trading weekly options or is more of a swing trader of equities or whatever.
We talked several times, and several of the things that you were describing, the crux of that was a reason to exit a trade and understanding the difference between micromanaging a position and having a legitimate reason to exit. I know this would be different for different people, but just as maybe to hear some of your thought process and some of those core ideas somebody could apply to their own. Could you walk us through, let's say you're in a live position and it's, in the process of working out, but you are going to take that position off. Could you walk us through what would be some reasons to exit a position other than, P&L or feeling scared or a kind of a weird jolt against you?
Yeah, for me, it's 100% about what I think the market is doing as a whole, the broad market. So you may have something that has a lot of relative strength and relative weakness and is definitely working for you. But what you want to be doing in the market, I think, is kind of being ahead of adverse things. So let's say I have something that's like really working for me and it's looking good, but I'm getting signals that the market as a whole is going to change tone in a big way over the next, the next day, over the next couple of days. That to me would be a reason to close a winning trade, even though it's a winner, because I feel that I'm doing the right thing, because I'm actually locking in some profit that I'm pretty confident I'm not going to have the next day because of what I see the market doing, but not because of some psychological, deficiency of like, oh, this is just such a big gain, I want to take it, out of fear. I don't think there's ever anything wrong with changing direction in any way, shape, or form if you can substantiate that with specific technical analysis, specific market profile analysis, maybe a news event, right? I mean, obviously things change like that. Like you could be obviously in a winning trade and a news event may hit and all of a sudden you just know like, okay, everything is different here, right? Especially if you're in financial stocks or things like that. And you get, something happens with bank stocks or something like you get my point. I mean, there's a myriad number of different trading things that can happen.
Yeah, very good. Let's say there's a scale of completely mechanical and then trading 100% off of gut. On a scale from like 1 to 10, 10 being no real process, just sheer what you see and think. How discretionary would you rate your style of trading?
Very high, I think, in the other direction. I don't just go off gut. I have to have a number of data points that's, all these different data points come together to support that. They create the thesis, not even support it. They create the thesis of what the idea is. And then I go with that. What I will say, though, is that as that process is unfolding, that whole gut thing that you're talking about, experience improves that. So if somebody is just new to it and they're just trading off that gut, just kind of very off the cuff, you can see that as a recipe for failure a mile away. But if you have somebody who's been in the game for, 10, 20 years and they've got some consistency under their belt or whatever, and that person tells you like, okay, this is just not feeling right or whatever, that should be listened to, because that person is getting that gut reaction, not from their personality or not from, a lack of discipline or something like that. They're getting that gut reaction because they've seen this movie before, many, many times. They know price action so well. They know how charts work. They know what things should be doing if it's going to continue to work out in your favor. I'm a huge believer of that. That's the type of thing I'll do all the time, especially in the daytime frame, right? I think that what we're talking about has a lot more application in day trading than it does in longer term trading, because in day trading, things can really turn against you like on a dime, and large profits can go to zero or become losses almost instantaneously, because obviously the amount of movement that we're trying to exploit is smaller. So we need to be right and stay right for that short amount of time and get ourselves out of profit before we're no longer right. So it has much greater ramifications for that. But definitely once you've been in the seat for a long period of time, you definitely start to develop that gut a lot in terms of, in terms of daytime frame price action. A lot of it really comes down to what I call the hashtag WWSHD concept. This is something that I came up with, which stands for when what happens doesn't. WWSHD, right? Excuse me, I apologize. When what should happen doesn't. Apologize. When what should happen doesn't. This is a 5-letter thing that I came up with. And that really, I think, should govern a lot of people's trades. They should constantly keep asking themselves, what is the market doing? What is the market trying to do? How good of a job is the market doing effectuating that thing? And if it's not, it's time to go. It's basically time to go. That's super duper important. I'm actually glad you asked that, because if we could distill all of this discussion down to one thing, really, I think it's the most important thing for traders to know the when what should happen doesn't concept. Because when something happens that you think shouldn't be happening, it is 99.9% of the time going to cause a pretty large rip in the other direction, whatever that may be, up or down. That is what's going to cause that. And it's natural, right? Because nobody sees it. They're all thinking the opposite thing. And they don't catch it fast enough to know when that opposite thing, when that thing is not working anymore. And they're all piled into that one side. We see that very clearly in the market. That's obvious. You see that mostly at the low of the day, high of the day, like in the S&P or NDX, where, classic example would be like a trending morning that usually will go down from 9:30 to 11:30. So you have 2 straight hours of decline, and then you have the flattening out where the decline starts to consolidate. And it usually happens in one out of 2 or 3 ways. Either there's a strong bounce there, which is shortable. That's the easiest way, because that bounce is going to go either to the VWAP or it's going to go to some sort of declining moving average. There's a lot of different ways to look at it, and you short that. That's easy. That's the easiest one. The hardest one that people get screwed up on all the time is the trending down decline that goes down for those couple hours, but then spends the next 3 hours sideways and doesn't break in either direction. And not usually, but think about it. What's happening at that point, if prices are staying low at the low of the day, the majority of the players are net short. They have to be. They have to be net short. We know this for a fact, because if they weren't net short, they would not have been able to bring the market so low from the open, and they would not have been able to keep the market low over the entire midday period. And that right there, if you're short, is you must be watching carefully, and it's dangerous. You have to be careful. And that is very often a recipe, right, for the market to go up hard in the other direction, because it's when what should happen doesn't. Because what should happen, what normally people think common sense wise, is that bear flag is going to break lower in the afternoon. And very often it doesn't. And what happens is you go hard in the other direction. So from a day time frame perspective, if you're in that time frame, that's a perfect example of something that you have to be extremely vigilant for.
Very good. A lot of wisdom in everything you're saying, and it's been very cool to sit down with you and to bounce this off of you. And I really appreciate the answers. I feel like we've covered a lot of information in a very short amount of time. We are out of time, I know, but for people interested in learning more about you or keeping up with you, or potentially being a part of your group even, can you tell us about ShadowTrader or where they can find you?
Yeah, absolutely. Yeah, we are at ShadowTrader.net. And all our information is there. And we also, if you look on the different pages of the site of the different products that we offer, on every page there is an opportunity to put in your email, but more importantly, in doing so, receiving a free gift. And the free gifts that we have there on offer, we think are extremely useful. They're not just like silly things that are just, something we're trying to get people's email addresses for or whatever. We have a lot of white papers and videos there. First thing that comes to mind is I authored a paper that is called the top 6 futures day trading setups. And I think it's of extreme value. It's literally like the top 6 setups that I think work over time. They've never not worked. That, it's just, this is where people should be focusing if they want to day trade futures, for instance. I have a video on the website called The Only Spread You Need, which is on the weekly options page, which is the advisory that I handle. Just basically without giving away the secret, but it's a short video on what I think is the #1 option spread that every single short-term trader should have in their arsenal. If you're going to trade weekly options, I find it very difficult to do without this one specific spread, things like that. So there's a lot of great stuff there, I think, for traders to check out. ShadowTrader.net. Beyond that, I'm pretty active on Twitter. That's at Peter Reznicek, just all scrunched together, my name. And you can also find us on Facebook as well. We post some stuff that's there. If you just look up ShadowTrader, you'll find us there.
Very cool. Thank you again for stopping by. And we'll make sure anything is linked in the description, that's connected to you, so that'll be very easy to find. I hope you have a great rest of the day. I'll pause the recording and then I'll say goodbye to you proper. But thank you once again.
Absolutely. Thank you so much. I enjoyed it.